Hey everybody, welcome back. I'm Nick Morgan, the co-founder of ICANN, Investor Choice Advocates Network, and the co-host for today's episode of Capital Ideas, where we celebrate the innovators and disruptors and the capital markets that help bring ideas to fruition.
And I'm Dara Albright. I am the co-host of Capital Ideas and a very proud board member of ICANN. And today, please join us in welcoming Shari Noonan. Shari is the CEO of Rialto Markets, which is a SEC and FINRA-regulated ATS, alternative trading system for private securities. Great to have you on, Shari.
Thank you so much for having me on, Nick and Dara. Really nice to be here today.
I thought maybe we could start by talking about issuers of private securities, and maybe you could talk about how difficult or challenging it's been for issuers of private securities, emerging innovators, to access capital, especially in recent years.
Thank you so much for that. So in our day-to-day world, we are a FINRA member broker-dealer, and we do work with a lot of issuers in terms of raising capital. And what we've really seen is companies are waiting to go public a lot longer. There are a lot fewer companies that are remaining public. And so you have this really a much larger landscape of private companies at all stages. But certainly at the innovation stage, it's very challenging because private capital is shifting. The way in which, it used to be a few decades ago, it would be either venture or private equity. Venture capital or private equity, and that was very concentrated in terms of what they invested in, what they looked at. Obviously, it expanded, but certainly you had to go through certain metrics or criteria. The last 10 years has been a fascinating, almost experiment, I'll call it. When the Jobs Act was enacted by the SEC, it allowed private companies to raise from the public. And so what we've seen is a lot of companies, as well as certain sectors or verticals, really leaning into this idea of community and raising from their community, activating their community. And that's been really fascinating from my perspective, because these are true retail investors. And oftentimes when we talk about it, I mean retail with a little r, not accredited or quibs or any of those other retail terms that we might say in financial services, but true unaccredited investors being able to invest in companies that they feel are really going to make a difference in the world, that they're really excited about, and we're seeing certain companies really galvanize that community and help them on their journey.
Yeah, like the founding of America, what it once was, it was the ability for every single citizen or American to invest in the ingenuity and innovation, invention of their fellow citizen, fellow neighbor, community. I love it. So one of the things I wanted to talk a little bit about, we're seeing such a transformation in the venture capital world. And one thing I'm really interested in, especially, is the tokenization of real world assets. So I was wondering if you could maybe talk a little bit about what role do you think that will play in venture investing going forward? And do you think that real world assets is going to be a way to mitigate venture capital risk going forward?
So this is a fun topic, and I'll just give you a little bit of background before I dive in. But so we are a FINRA broker-dealer, as I mentioned, but specifically, we spent about 2 years working with FINRA and the SEC to be able to work in what are called digital securities, just blockchain-based securities, because we really felt specifically for the private markets that blockchain technology really and tokenization really had this capability to harness a greenfield type environment where there wasn't a ton of operational or technical legacy infrastructure already sitting there. And we definitely believe, and we're already starting to see some of these RWA projects come to fruition in the tokenization space. And the way I sort of think about it, and lawyers, I know, Nick, you're a lawyer, so you'll probably disagree with me, but I'm sure there are nuances in there. But in very broad terms, what I love about the ability to tokenize something is not only can you then begin to scale it, go to a much lower capability and create new products. If you think, sort of ETFs or indices, new product creation at a much lower cost point. But you can also start separating out the governance from, an economic or some sort of other right, and you can start to split apart the stack in terms of what, in terms of what things are, how things are structured. And that to me is really interesting. We're working on a project right now in private credit. And it's, private credit funds that want to lay off some of their risk, but they want to retain the governance rights. So how do you pass how can you pass the economic rights on, and how can you structure that in such a way that is acceptable to investors, while retaining those governance rights? And as the investor, you probably are happy because this private credit firm, that's their focus, right? They know about this space, that's what they're into, and so you want them to own the governance rights, and you want to just invest in a side, pari passu basis with them. So those are the areas that we're seeing a lot of uptick in the tokenization of real world assets, tokenization of different types of structures. And the sort of two areas are, or whether it's in real estate or private credit, or being able to diffuse risk, to your point. So now it's not concentrated with one investor, but it's spread across a number of investors, or it's investing in asset classes like music royalties, which are completely non-correlated to equity markets. And we're seeing a lot of that. Which we're really excited about.
I can't wait to see how this plays out. I mean, what a fascinating innovation to be able to separate out the different qualities or characteristics of a particular vehicle. Very cool. So good luck with that. By the way, I am not opposed to reducing the role of lawyers. In fact, we're trying to reduce the regulatory burdens. And if I put myself out of work, that would be a victory. So that'll be my objective. So on that topic, one of the things we focus on at ICANN is regulatory barriers to entry into the capital markets, or just burdens placed. And you mentioned a few, and I'm glad to hear you were able to work with FINRA and the SEC on the digital assets issue. But what have you seen as some of the regulatory barriers out there that private issuers or investors in private issuers are facing?
A lot of barriers. And I think it's, fundamentally, the world has changed and is changing and has changed. And so, if you rewind 10 or 20 years and you went to regulatory bodies, what were they really concerned about? And I'm trying to think, that was 2000-ish, 2005. I mean, before the crisis, what were they worried about? They were really worried about, obviously they're always worried about protecting the individual investor, but it was a lot more about, it was almost entirely about public markets. And that was my background, was electronic trading in public markets. And how do we get everything into, one system, different data feeds, putting everything in the box, right? And getting everything to flow, and connecting markets, and making sure the best bid and best offer, the market, the best bidder offer, that's the market that's hit. So connecting all of these markets and ensure fairness. And really, over the last 20 years, because of things that I've stated earlier, public markets are still there, but if you take out the Magnificent Seven, really, it's very skewed. It's very, very skewed. And indices have really played a role to sort of deploy capital into instruments that perhaps an individual investor would not have invested in otherwise. And so we sort of wake up in late December 2024, and we say, oh my gosh, there is all this activity, there is all of this potential innovation in the private markets, and there just aren't very many people in the regulatory world that truly understand private markets. They might understand fund structures, they might understand, the specifics around asset allocation and private equity and marking marks, but private markets and private markets at scale is something that the regulators are just now trying to put their arms around, or are just putting their arms around now, and so it proves to be very challenging for issuers that are trying to do something different. You can get sort of caught up in this cycle. In fact, we're working with a group right now. They have spent 4 years working with the SEC to get something approved. 4 years. And it's basically a product that trades every single day and has for years and years and years. And they're just doing it in a different, on different rails. That's it. It's still going through all of the major market centers, major marketplaces, and it's really fascinating to see how things can just get sort of stuck in a loop.
Right, right. Well, that is something we've heard not just from you, but from others, and the inability of regulators to be nimble. I mean, a lot of what you just talked about came from the Jobs Act, which is not new anymore. I mean, that's been around for a while. It should not take regulators that long to pivot to the new reality. Well, we're doing this on the eve of 2025, and really appreciate what you're doing. And maybe, we look forward to the next 25 years and you being a part of it. And we'll see, I'm sure, lots of innovations that we can't even anticipate sitting here at the end of 2024. So, Shari, thank you so much for coming on. Dara, as always, thank you for co-hosting, and maybe we'll leave it there for the rest of you. If you want more information about ICANN, we are at icanlaw.org, and we'll see you on the next Capital Ideas. Thank you.